Whenever I hear people try to explain DeFi, they instantly jump into AMMs and complicated calculations that will not matter to most of you all anyway. This series will be different. No matter if you are new to DeFi or just want to learn more about DeFi on the XRP Ledger, I will help you get started. I plan for this course to be very beginner friendly, so you don't need to worry about anything complicated, as I will keep it very easy and straightforward. So no complicated math, I promise. Hey, what's up? And welcome to my XRP Ledger DeFi series by the one and only me, Krippenreiter. In the first video in the series, we will go through the very essentials, which are not AMMs, and talk about order books and their structure, and lastly about market makers and what it all entails when someone says he's making the market. Before we jump straight into order books, I would say we take the time and define some traditional finance terms first and define what DeFi really means. DeFi in its essence just means decentralized finance. So anything in the traditional finance world, like lending, borrowing, trading, or using an exchange or a broker. So basically anything in the traditional world put on chain to be transparent, distributed, and permissionless is DeFi. So as long as you custody your own keys, you can take part in it. At the heart of DeFi, you will also see something like a DEX, a decentralized exchange, which sometimes may include an order book and an AMM, but most of the time just an AMM, an automated market maker. So whenever you want to sell or bid something, you will end up using DEX capabilities, just like you would use a centralized exchange to buy equity or exchange fiat. Which is exactly why I think an order book is the single most DeFi thing you can think of. It's basically using what we already know from the traditional finance world, like broker order books, and put them on chain on a blockchain to trade, bid, and ask any price and consume orders. But you will still rarely see them anywhere else than on the XRP Ledger, because hosting or storing passive orders on a blockchain is very costly, and for most blockchains it's way too costly to do that, which is one unique feature that the XRP Ledger offers in contrast to many other blockchains. Here I will now explain the terminology for a CLOP-based DEX, a limit order book DEX. Starting with bid and ask. Bid is a price a buyer is willing to pay, where the ask is a price a seller is willing to sell for. There's also best bid and best ask. For best bid, it just means that it is the highest price a buyer is currently willing to pay, whereas with best ask, it's about the lowest price a seller is willing to sell for. You will see both of them on the top of the order book. There's also making and taking. For making, it's just adding liquidity, so any order that gets placed and is not consumed is also called a passive order and adds liquidity to the order book. There's also taking, which removes liquidity every time an order gets filled because someone consumed an open order in the order book, which is sometimes also called aggressive order because you're taking out liquidity from the order book. There's also price discovery, which is the process by which the price of an asset is set. You can think about it like, imagine people running around on a marketplace and trying to find out for how much they should sell their apples or strawberries, for example. While others try to find out for how much they should buy them. On the order book, the price discovery is more natural because you can simply see all the prices in the order book. Then we have spread, which is the space between the best bid and the best ask, which you will see on the top of the order book. Then we have volume, which is just the quantity that is traded. You will sometimes see the quantity calculated in assets, or you will just see the quantity calculated in US dollar. It depends on where you look at. And lastly, we have liquidity, which is just the ease with which an asset can be converted into ready cash without affecting its market price. Or easier put, the more liquidity there is, the less the price is affected by your trades, for example, no matter how high they are. Low liquidity in this sense just means a supply shortage basically, and a drastic change of the price whenever someone is buying an asset or selling an asset. Okay, please don't be scared. It looks scarier than it really is, but I will explain everything. Let's start with the fact that what you are seeing right now is just an interface. It's just something or a website that is interacting with the real XRP Ledger DEX, the one and only DEX that exists on the XRP Ledger natively. What you are seeing is the unhosted.exchange website by Zaman. On the top on the left, you can see the trading pair, the actual price. You can also see the daily high and the daily low price. You also see the daily volume in XRP and the daily volume in USD. You can also search for any tokens on the left side, let's say USD. You can switch between Zahao and XRP as the base pair, and you can see all the trust lines that I have set. And on the settings menu, we can see the currency pair. I will explain later what a base currency and a quote currency is, because it's sometimes a little bit tricky to understand what it all means. We can also switch the ledgers. I'm currently connected to the XRP ledger, but we can also switch to the Zahao ledger. Wait a little bit. And now I'm connected. When I'm connected to the Zahao network, I will only trade against Zahao trading pairs that exist natively on Zahao network. So let's switch back to the XRP ledger. In the middle you can see the trading view trading chart and all the candlesticks. You can also see the weekly, daily, 2 hour, 1 hour and 15 minutes chart. Every time frame that is configured represents the candlesticks. So one candlestick on the weekly means that every candle in this chart represents 1 week of trading. If we switch to daily, we can see that every candlestick represents a daily trading day. And the 2 hour chart means that every candle you can see represents 2 hours of trading, and so on and so forth. There's also something called depth, which represents all the accumulated amounts that you will see later on the order book. On the right hand side we have the order book and all the orders. We have the sell side, which is also the ask side, and we have the buy side, which is also the bid side. We have the top of the order, which in this case is this price and this price on the sell side. The space between these two orders is the spread. We can also switch the tick size numbers, which represent the digits behind the dot. We have also the trades, which show all the timestamps and quantity and prices already traded in the history. And on the right hand side, we have buy and sell. So we can market order buy and market order sell, and buy and sell any XRP. We can also set the order type to limit, which is something I would always recommend. Here we can set the limit price for all the XRP we want to buy, for the specific USD price we are willing to buy or sell. On the bottom there are also some additional options we can choose from, which I will explain later. And lastly, on the history, we can check what I have traded in the past. As you can see, I bought some USDC, the status is closed, so I got all the amounts I wanted to buy. And my selling price for XRP to USDC was 0.5174. The condition was fill or kill, and I had to pay a few drops for the fees. To better understand candlesticks, I asked for some help and got these two gentlemen to help me. On the left hand side you have the bullish candlestick, and on the right hand side you have the selling or bearish candlestick. They both have something like a body and a wick, which represents the whole candlestick. The whole candlestick can go from the lowest price on the bottom up to the highest price on the top, no matter if it's a bullish or a bearish candle. You have also the opening price and the closing price, and on the right hand side for the bearish candle we have the opening price on the top and the closing price on the bottom. So if the closing price is below the opening price, we know it's a bearish candle, and if the price closed above the opening price, then we know it's a bullish candle. Let's summarize the order types again, because I'm really keen to get this across. So let's start with the market order. To summarize a market order, you can simply say fire and forget. That's all what it is. It should rarely be used and will completely wreck your funds or your portfolio if the order book doesn't have enough liquidity ready. It will always try to execute the order no matter the situation on the order book. It will do so until there are either no more orders left to consume or your order got completely filled no matter the price. The limit order should be your default type of order. So if you don't know what to do, this is what you should always configure or set whenever you trade on the order book. You will need to plan a little more than with the market orders, but you will end up with a way better result. There's also one more important thing to understand, which is the price you set will be always the worst price you allow this order to be executed for. Meaning, if better orders are available in the order book, then those will be executed up to the price you set in the beginning. So anytime you set an order with limit order, you will also get all the orders filled in the order book that are way better than the one you set. Then we have the additional options which we can combine with the limit order type, which is good till cancel, immediate or cancel, and fill or kill. We will start with good till cancel, because good till cancel is a passive order and is the default behavior. Whenever you do a limit order, most of the time you will always choose to do good till cancel. In simple terms, you set an order at a specific price and it will sit passively and wait there until it gets filled or you cancel it. Then we have immediate or cancel, which is basically no one is left behind. It's an always aggressive order that gets filled either fully or just partially without leaving anything behind. If the order gets partially filled, then the rest of it gets automatically cancelled. If the order reaches the order book and it turns out that nothing gets filled and the order would remain passive, then it would automatically cancel itself as well. Then we have fill or kill, which is a hit or miss. If the order cannot be fully filled in the current book, then it will be automatically cancelled. You either get what you want or nothing happens. It's the perfect market order replacement because you will either end up with the amount you wanted without going bankrupt or completely save yourself from a bad trade. Sounds good, right? Next one is about the currency pairs that you can trade on the unhosted exchange DEX, for example. In my example, I choose XRP and USD as the currency pair, but you can choose any other currency pair that exists. For example, you could choose USD to be on the left side and XRP on the right side. In my example, the base currency is XRP and the crowd currency is USD. And it equals 0.50, so $50. If you really want to understand what this currency pair means and how to read the chart, it's easier to just put a 1 in front of the base currency. Why is it easy? Because now you can simply imagine or say to yourself, how much USD is 1 XRP worth right now? The answer is always the price that you see on the chart. It's the same if you switch it up and you say USD is the base and XRP is the quote, then you would say how much XRP is 1 USD worth right now, and it would equal another price. But now it gets tricky. If you want to know what it means to buy and to sell, you have to really think about what you are doing. From the point of view of buying, you are always buying XRP and selling USD. So you give up USD and get or receive XRP in return. And from the point of view of selling, you are always selling XRP, the base currency, to receive USD. The last topic I want to cover in this video is about market makers and market making. Market makers are bots that hold both sides of an asset, for example XRP and US dollar, and are willing to take any side of a trade either through buying or selling so that most trades get consumed. They also earn money by trading the spreads between the buy and the sell side. They also usually get a certain premium for the risk of holding an asset like XRP that could plummet in price at any time and make the asset worthless. but it's not about XRP in particular. It's about any asset that the market maker has to hold to do the market making. So for an actual example, we could look at the XRP USD price. Let's imagine the current XRP USD price is 50 cents. So what would the market maker do? The market maker would ask the order book and try to find out what is the current best bid and the current best ask and what is the spread. So for the best bid, he would get 48 cents. For the best ask, he would get 52 cents and the spread would be 4 cents. He would then buy XRP for 49 cents and sell XRP at the same time, basically instantly, for 51 cents. This would be an easy profit of 2 cents that the market maker could capture at any time. Okay, that should be it. There are a few details that are left out on purpose, like hidden orders and trading strategies, because I want to keep the series simple and I really don't think that's something a beginner should care about. If you still have any questions, feel free to write them in the comments below, and don't forget to like and subscribe. I really hope you learned something new today. I wish you a lovely day, and until next time, ciao ciao!